Hey everyone, and welcome back. Good morning, good afternoon, good evening to everyone. Hope you're all having a good start of the day. Welcome back to the breakfast show. We have a lot to talk about. Breaking news. We have CPI data that just came out. We've got SoFi that officially announced their own stablecoin. We've got Openai that's looking to raise $100 billion. That might not even be enough. We'll go over those numbers in a bit. We do we have some more? No, government shutdown still sits at 38% chance of happening at the end of January. We have here already some CPI data for you guys. So let me pull it up real quick, and then we'll see if the market actually responded to that number, because yesterday was a pretty bad day. Yesterday was not the greatest day in the market, especially not for neo clouds. Pre-market all green, then the market opens and it's all red. So let's see. Let me pull this up. Voila, and here we go. So November US CPI annual inflation rises 2.7% below expectations of 3.1. Core CPI inflation increased 2.6 year over year compared to forecast for a gain of 3%. So these are all the numbers here that we are getting at the moment, which I guess it's better than feared, right? Much better than feared. When you are core CPI, when we're at 2.6 and the expectation was 3%, CPI 2.7, expectations were 3.1. Well, seems like we are in a better situation for now. Better situation for now. We just got a rate cut. I don't know if the probabilities of a rate cut right now will change that much for January. Yesterday we looked at it. It was in the low 20s. Right now, if I'm looking at it, it is 26.6. Of course, over the next couple of minutes, maybe that might change. But in the meantime, this is basically what we are getting right now. If we go and look at the heat map, this was yesterday, which again, yesterday is not great. Pre-market for neoclouds, we are seeing a lot of green, but we've seen the green yesterday pre-market. So this is basically it. This is what we're getting at the moment. Pre-market, the heat map looks a lot better than yesterday, let's be honest. It might have to do also with Micron. We're going to go over a couple of numbers for Micron. Already covered that in yesterday night's long episode. Micron crushed it for the quarter. Stock is up 13% pre-market, crushed for the quarter, crushed for guidance. I mean, a $4 billion beat for next quarter revenue outlook. Incredible stuff by Micron. The poll is running, of course. There is also an extra option if you think that Micron will be red towards the end of the day. I guess now with the CPI report coming out, chances are that it will stay green throughout the whole day. See if we've got some more reactions here or more data on the CPI report. Probably there are some people that will just post the various categories, so we can have a look at that. So yeah, it seems like the big problem is definitely not inflation at the moment. the labor market is, as we've seen unemployment being a bit higher than what was expected. So we'll see. I guess that's maybe an issue that you can better control, since now inflation is seemingly under control at the moment. We'll come back once we have a bit more data. Breaking news for those that are SoFi shareholders. SoFi launches fully reserved stablecoin to power financial infrastructure for banks, fintechs, and enterprise partners. We've talked about that in yesterday's video. Anthony Noto did appear on a podcast, talked a lot about crypto. And today we actually have the official announcement. So, as you know, SoFi will be the first national bank to offer open access to its stablecoin, SoFi USD, and stablecoin infrastructure, bringing bank-grade oversight and reliability to companies looking to integrate stablecoin products and services. So, SoFi USD will also be available soon to all SoFi members. It will deliver three things here. One, regulatory strength, reserve transparency, and institutional infrastructure. I think this is an important part here. SoFi stablecoin infrastructure will enable banks, fintech, and enterprise partners to leverage SoFi's regulatory, operational, and reserve framework to issue white label stablecoins and integrate SoFi USD into their settlement flows. He talked about that during the podcast, basically giving them 95% of all the economics. Just take our SoFi USD, the white label stablecoin, wrap it however you want, and move forward. So we've got the stablecoin, we've got crypto before the end of the year for SoFi. 2026, I do think, is going to be yet another pretty good year for SoFi, despite some of the negative sentiment around the company, because they raised money to accelerate the business top and bottom line. Okay, I'm looking at the execution and I like what I'm seeing. So to whoever here is from the US and uses SoFi, do keep an eye out on this on SoFi USD, whether or not you will be able to use it maybe before the end of the year. If you do, let us know what the experience is like. So that's SoFi. Did the stock move on that news? We are going to find out. We're going to find out. We have your fintech names. We have PayPal that's down 0.9%. It was down 2%. We'll talk about that bullshit note in a bit. SoFi is up 3%. Hood is up 4%. Affirm 2.7%. Pagaya 2.5%. By the way, all of those names were red towards the end of the day. A lot of them were green throughout the day, but the last hour and a half yesterday, everything just poof, crashing down. So a lot of names are up over 2%. For the fintech names, for the neo clouds, we've got Hut 8, 5.5% up. Yesterday started the day up 22% and ended the day, I think, only up 8% or so. Cypher is up 4.5, White Fiber 3.6, Iron close to 5, Applied Digital 4.5, Nebus 4.5, CoreWeave 4%. And I did add here Core Scientific. I don't know why it wasn't on the list until now. Core Scientific is up 6%. We'd also have a positive note on that name, which also talks about CoreWeave. I think the same analyst has a price target for CoreWeave at $180 or so. All the chip names are green at the moment, with Micron being up 13.7%. We'll look at that in a second. All the rest are up over 2% for now, pre-market. Don't be popping champagnes just yet. And exactly, I don't know what color this is. This is, yes, indeed, fairly new. We don't know. We are unfamiliar with this color. We are a bit more familiar with this thing right here, with red. But yeah, so far, so good. Big tech companies, they're all green. Even Oracle is up 2% at the moment. If you look at the general list, we have BMNR that's up 5.7%. Rocket Lab is up, another successful launch by Rocket Lab. Still 100% mission success for the company. What else do we have here? Palantir is up 2.7, almost 2.8. Rubrik is up 2.4. I would assume if Nu is up 0.8, then Meli should be not that far from that. up 0.7, Uber is up 0.9, very cheap in my opinion. Oscar is down 0.5. So yesterday there was a vote in the House. So they have a new healthcare plan, I assume, affordable healthcare plan, but that does not include the extension of the enhanced subsidies. So currently, the enhanced subsidies are going to expire towards the end of this year. What does not expire is, of course, the ACA subsidies. I mean, the regular one, because you have ACA subsidies, then you have on top of that the enhanced one. And the whole story is about the enhanced ACA subsidies being extended. They are not going to be extended as of everything we know about it today. So Oscar is down on that news here, close to 1%. But as we know, Oscar has prepared itself already for, going into 2026 with ACA enhanced subsidies not being extended. They've raised their prices because, well, if enrollment goes down or the market contracts by, I believe, what did they say, around 25% or so, that's their projections for next year. So they are well positioned going into 2026, because I think what they did is worst case scenario. And if it is better, then good for them, but also good for their members. I think they'll get some rebates happening. So that's Oscar. That's why they're down. PayPal is down for another reason. And the reason, does PayPal need a reason to go down? Probably not. But I'll read you the reason why PayPal is down this morning. We've got an analyst that put a price target lower, but much lower at $51 price target for PayPal. Let me actually try and find it, because a lot of news came out in the meantime. We've got Bank of America that also cut a bank rate by 25 basis points to 3.75%. Where is this? I'll pull this up already for later. There's a HSBC model for OpenAI. The numbers are crazy, and you won't even guess how big the numbers are and what OpenAI needs to do in order to not lose money in the future. Thank you for becoming a member. I don't know why it pops up here as 3 times. Did you become a member 3 times? Anyways, thank you for becoming a member. Appreciate it. So for PayPal, we have a Morgan Stanley analyst who downgrades PayPal to underweight from equal weight and lowers the price target to $51 because it isn't cheap enough today. So he went from $74 to $51. And look at the reason. Improvements to branded checkout integration will be slow and complex. Okay, good morning. And we expect sluggish total payment volume dollar growth through 2028 due to share loss. I guess he didn't listen to anything that management has told us over the past couple of weeks and months, since the investor day actually. Take rate degradation, and this is the dumbest part of the note, lack of Venmo monetization. Lack of Venmo monetization, really? Because last time I checked, Venmo's growth and monetization are going up and to the right. And again, someone that I follow on X, good follow here, said, these are the guys that asked the question during the earnings call. These stupid questions get asked during the earnings call. How can you, as an analyst, come out with this note and say there's a lack of Venmo monetization? Venmo has been one of the best parts of PayPal over the past 2 years. The growth there is great. The monetization is starting to work, and yet lack of Venmo monetization. And then he also adds, while the agentic narrative will be an overhang, why would the agentic narrative be an overhang? Seriously, it's only upside. Every partnership that they made is only going to help them in the future. So what's the overhang here? I don't know. So they are revising margins and EPS lower, downgrade to underweight. I think maybe he got tired of having a $74 price target while not understanding the business. So he's like, stock is at $60. Let's put our price target much lower than that so we can play it safe. And then in 2026, we are probably going to raise the price target. Because remember, with all the negative sentiment around PayPal, which some of it is self-inflicting by just bad messaging by management, buy now, pay later, doing extremely well. Venmo, doing extremely well. Braintree is not a margin-losing business anymore. No, Braintree is actually starting to grow and grow in a profitable way. We've got stablecoins. That's also growing for PayPal. The whole branded experiencing is doing better. OVAS value-added services is also doing much better. It's true that branded checkout, that's the only thing that does not work as well as expected. But notice how many good things are already happening. It's just that this small but important part is slower than expected. It's not that the solution doesn't work. The solution does work. Whoever upgraded to the new PayPal solution is already seeing very, very good results. It's just that making sure that everybody or most of the partners that have been using the legacy PayPal systems are moving to the newer ones as fast as possible, and that's the slow part. It's not that once they move, the results suck. No, once they move, the results are great. But the moving part is the time-consuming part here. So again, I don't buy this whole comment on PayPal right now. There are various things that you could have said that I would have agreed, but this is not it. This is not it. Then we've had news that OpenAI is looking to raise $100 billion. $100 billion, valuation $750 billion or so. Now, if they are successful, don't forget to drink water. If they are successful in raising $100 billion, first of all, whoever is buying this at 750 billion, God bless you, but it will bless our stocks, that's for sure. Because if they can send the message to the market and say, we've just raised $100 billion at $750 billion valuation. By the way, Brad Gerstner, alt cap, you wanted to buy more shares? Now is the chance. Now is your chance to do so. And so if they can say, look, we are raising 100 billion, poof, we actually raised it. I think that's going to send a very, very big signal to the market and to this whole industry, right? Every AI stock that got crushed right now is probably going to go back up because suddenly the narrative has changed, suddenly the sentiment will change. But if they do not successfully raise the $100 billion, well, then the exact opposite is going to happen. Because then the market will say, oh, OpenAI, the number one player, right? Although it's not true, but let's say they can't raise $100 billion. They can't raise enough money anymore. Seems like the market doesn't trust this whole AI narrative, right? And then, poof, we go back down. So I sure hope whoever has been pumping up OpenAI over the last couple of weeks and months, you better put your money where your mouth was, because otherwise, pitchforks and torches. So yeah. PayPal getting into banking just made them even riskier. CEO should quit. I not 100% disagree. I 200% disagree with this statement. First of all, they didn't get into banking because they didn't get a bank charter. It takes a while to get it. Second of all, why does it make them riskier? It will make them more profitable. Make them more profitable. It's a no-brainer. It's exactly what SoFi has been doing. SoFi, thanks to the banking charter, can grow and become more and more profitable as well because they are vertically integrated. For PayPal, it is a no-brainer to have a banking license. Let's hope it's not more circular. I mean, it's definitely going to have some circular financing, for sure. You disagree, but again, try and make your case. The market does not disagree because PayPal was up when they announced it. The market just disagrees right now because some analysts came out with a stupid note. But explain why you think a banking license is not a good thing for a company like PayPal. Then we have this, HSBC. They modeled something out. OpenAI may need to raise at least $207 billion by 2030, even if users climb to $3 billion and revenue reaches about $214 billion in 2030. They estimate roughly $792 billion in cloud rental costs through 2030. So this is basically their forecast. Will they reach 3 billion users by 2030? Remains to be seen. Estimated revenue by 2030 to be $213 billion, which is an insane number when you think about it. There is a second channel uploading my videos. You mean in other languages? Like in Portuguese, in Spanish, and in German? $213 billion in revenue by 2030. Most of us will say, okay, great, insane, incroyable. But look at this. Look at this. We've got revenue, right? The insane amount of revenue. But look at the total cost of cloud compute is almost the same as the revenue. It's almost the same as the revenue. So even, it's insane, even when they are, or if they are going to generate $200+ billion in revenue 4 years from now, the total cost of cloud compute is, according to HSBC, still going to be probably the same as revenue, $200 billion or so. And as you can see, I mean, free cash flow is improving, but still going to be negative by 2030. Which is, when you think about it, it's insane. What company today generates $214 billion and is still not generating a cent in free cash flow? Crazy. I don't know. I am again coming back to my main point, which is actually this. Let me show you. I actually tweeted this one out. So yesterday when we got the news, right, that they're raising $100 billion, the same video. So Chris, please link the channel in the chat or the name of the channel, and we will figure this one out. So this quote right here: people who are really serious about software should make their own hardware. This is what popped up when the iPhone was announced, right? This is something that Alan Kay said, and this is something that Steve Jobs has said as well. If you're serious about software, you should make your own hardware, which is also why I believe Sam Altman, OpenAI, they do want to come out with a physical AI product. Because if your software is so good, then yes, you should be including it in a specific hardware product, and then the adoption just increases. You can monetize it in various ways. I don't know when they'll come out with their own hardware, but it's just a question of when, not a question of if. And by the way, whoever finds a channel that just copy pastes my video, but I am now working with another company that does translate my video. So don't flag those channels, which are in Spanish, Portuguese, and German for now. But if there is a specific channel not affiliated with me that copy paste my videos, you can definitely report it. Okay, let's see if I can find that. In the meantime, this is basically all the economic data that we have right now across the board. This is it. Let's see. A hologram that you can talk to, like in Star Wars. Yeah, wouldn't that be something? Let me first report this channel. It's literally not only using my name, my logo, my videos. Wait, let me just deal with this for now, but I'll show you something in the meantime. More bubble talk. I'll actually counter bubble talk, which is better.
Micron moving higher. It's actually our biggest gainer on the S&P this morning, up just about 10%. It seems like it's going to give some more confidence to the AI trade, but it's been a bit wobbly. How are you viewing this Micron report and then some of the other concerns, whether it be Amazon and its potential deal with Openai or the Blue Owl Oracle situation? How are you viewing the AI trade as a whole right now?
Yeah, I would say zooming out, I appreciate the skepticism the market is levying at some of these deals. I think the sign that we're not in a bubble is the level of skepticism levied at OpenAI from their debt deals, from some of these more questionable circular spending deals. It certainly hasn't stopped price gains in some of these stocks. AI is still, in our opinion, a transformative technology. But I think the thing that keeps this bull market from at least being a bubble yet is the very healthy skepticism aimed at some of these deals. I would also say, as we move into year 4 of a bull market, the dispersion between winners and losers, and particularly as we focus more on the fundamentals rather than just a rising tide that lifts all boats in multiple expansion, is natural. So you're going to see your winners, the ones that are growing earnings and providing good guidance, and you're going to see your losers. Oracle kind of lumps in that later category right now.
All right, so how does healthy skepticism work with what some people believe is the unhealthy concentration in the market? If you're looking at AI stocks, they're now 46% of the S&P. Just for reference, if you look back in 2022, same month, it was only about 27%. So if we have healthy skepticism, how does this bull market continue when so much of the market is tied to AI?
Yeah, well, I would say look at the last 6 to 8 weeks, right? AI has been under fire, and we've still seen some nice market gains, especially in the equal weight and the Russell 2000 and abroad. So it's been a pretty broad market. Obviously, the concentration can obscure what's going on under the surface, but for stock pickers, for people who are not just passively invested in the S&P, you've seen strong gains from things like industrials, financials, consumer discretionary providing a spark of life, and as was mentioned earlier, abroad. So it has been a broader market than I think the headlines would indicate. And I think that's really healthy heading into 2026 when we expect the fundamentals to kind of follow in suit.
All right. How do we just judge where investors are when it comes to risk in this market? It seems like the AI trade's got a bit riskier. Wolf actually out with a note saying a crypto winner's coming. Is Bitcoin and cryptocurrency, is that something we should be looking at as a gauge of sentiment and the direction of the market? We had people like Tom Lee telling us just a few weeks ago that, well, crypto actually leads the market, at least leads the NASDAQ. It doesn't seem like that correlation still exists.
Yeah, it's tricky. I mean, I've typically thought of Bitcoin and crypto as both a little bit of a sentiment and a liquidity indicator. And I think that the story of 2026 is going to be about abundant liquidity, both from rate cuts and from a lot of stimulus coming from the one big beautiful bill. So I do think that there could be a boost to some of those more liquidity driven assets as we move into 2026. sentiment for me is the biggest near-term risk to the market in Q1 in particular. You know, if you look at the survey data, we're getting bullish. If you look at some of the IPO headlines, I mean, that certainly has a corollary to the late 90s. That screams bullish. And then if you just look at the strategist sell side targets, I mean, S&P 8,000, S&P 8,200, these are the kinds of things that start to raise flags in the head. I don't think it's a structural risk, but near term for sure will reset things, and then I think the bull market continues into year end.
I mean, we did get some mixed messaging, right, from Tom Lee. I mean, he did say he does expect the start of 2026 to be a bit more volatile and actually on the downside. Towards the end of 2026, more upside, but his target is what, 7,700. Yesterday we've seen, forgot who made the assumptions, also towards mid 7,000s for next year. So they're all looking at 8, 9, 10, 11% gains in the S&P next year. Of course, if we do end this year a bit lower, then and their targets don't move that much next year, then the upside is going to be bigger naturally. So we'll see. I think we're still going to expect quite a lot of volatility over the next couple of weeks. As someone mentioned yesterday in the chat, triple witching is happening. To tell you exactly what that means, it is, and I'll tell you exactly, is a term in the financial markets for the simultaneously expiration of 3 types of derivative contracts on the same day, which leads to a significant increase in trading volume and price volatility. This event occurs 4 times a year on the 3rd Friday of March, June, September, and December. You guessed it, it is tomorrow. And also tomorrow we have probably the Bank of Japan that will raise their interest rates. So that's all happening over the next 24 hours. Now, switching to Micron. So Micron has had an amazing earnings report. Actually, let's just look at the slides right now. I'll keep the CPI data on screen for those that are joining me a bit later. Russell, I flagged that channel to everyone. It's not just Tanner. It was me, Tanner, I think Tom Nash, Joseph Carlson, and a couple of other creators out there. That's another channel, an AI channel, basically stole our content. So for Micron, first of all, they have completed agreements on price and volume for their entire calendar of 2026 HBM supply, including Micron's industry-leading HBM4. They forecast now that the HBM TAM compound annual growth rate of approximately 40% through calendar 2028, from approximately $35 billion in 2025 to $100 billion in 2028. This $100 billion HBM, only HBM, total addressable market is projected to arrive 2 years earlier than their prior outlook. Remarkably, this 2028 HBM TAM projection is larger than the size of the entire DRAM market in calendar 2024. So again, insane demand. This is just Micron. There still is SK Hynix, there still is a Samsung. Do I regret taking profits? No, because it's now back at the prices where I took profits. Right? I took profits, the stock declined, and now it's back to the same prices. So I didn't really lose from this at all. I still have the position. So whatever upside is left, which I still think there is, otherwise I would have sold out of the whole position, I can still participate in that. Then let's actually look at the quarter. So the quarter, $13.6 billion, up 21% quarter over quarter and 57% year over year. DRAM, which is 79% of the total revenue, that increased 69% year over year. Very nice. 20% quarter over quarter. ASPs increased approximately 20% quarter over quarter. As for NAND, revenue there increased 22% year over year and quarter over quarter. ASPs here increase in the mid-teens percent range. And so across the board, each business unit has been performing very, very Well, we do have in core data right here, right? Revenue didn't increase that much year over year, barely increased a little bit here in gross margin, but all the rest, cloud memory, 51% last year, 66% gross margin this year, 40% operating margin last year, 55% this year. It's been an amazing quarter. I mean, this whole year has been amazing for the likes of Micron. And then you've got the others, right? We've talked about this, I think, yesterday or 2 days ago. SanDisk, WD, they are having quite a good year. And so, yeah. How long will this continue? Well, it seems like it can continue again for a while. So Micron is now, $251, I think, maybe a little bit higher than that. So it's now, I think, $2 higher than when I took profits on the name, which means my whole position continues to go up, which is a good place to be in. Let me check if the probabilities of a rate cut has changed since we've got the CPI report. I don't think it has moved at all. Yeah, a little bit, 28.8%. We're at 26 point something at the start of the stream. So not such a huge difference. As for the other news, we've had Coinbase had a big event yesterday where they, guess what, announced a bit of the same stocks, derivatives, prediction markets.
And Mackenzie Segala spoke with the CEO, Brian Armstrong, and has more. What is going on with Coinbase, Mackenzie?
Hey, Brian. So Coinbase is rolling out a major slate of new features designed to turn its app into a one-stop financial platform, adding stocks, more advanced trading, and prediction markets, while also doubling down on its on-chain ecosystem and tools for businesses and developers. Now, I just sat down with CEO Brian Armstrong, and he insists this is not a copy-paste of the Robinhood playbook. Coinbase already owns a massive crypto-native audience, and now he wants the main app to be the place that you trade everything: stocks, derivatives, and prediction market contracts, alongside a longer-term roadmap aimed at eventually bringing equities on-chain. But the space is getting crowded fast. Kalshi and Polymarket are battling it out, and Robinhood just jumped deeper into sports by adding NFL event contracts last night. But Armstrong tells me that the point isn't just to trade outcomes here, it's to read the world in real time, and he thinks prediction markets can become a mass market information product.
Maybe 1% of people use it as an asset class to trade, and 99% of people are using it as a way to figure out what's going to happen, almost like a competitor to traditional media or maybe even entertainment.
And that's the bet. Coinbase wants outcome trading to become one more daily habit inside of its app as it builds toward being a next-gen brokerage. Brian?
So you got Robinhood also getting into these prediction markets, leaning in, as they would say. Is this like the next big battleground for the retail trader?
Absolutely. Coinbase is looking at what Robinhood has proven out over the past year. More than 11 billion event contracts traded, its fastest growing product by revenue ever in Robinhood's history. A stock that's up more than 200% year to date. Meanwhile, Coinbase is in the red, down about 5% on the year. And it sees this diversification as a way to bring new users into the ecosystem with this sticky product that they haven't offered before, a way to keep them there even when crypto prices are trading lower like they are today.
Very quick.
So, first of all, we have US jobless claims, 224,000 in December. Estimated number was 225,000. Second of all, two things on this Coinbase, Robinhood, Kalshi, Polymarket type of move towards basically, yes, more gambling. Let's call it what it is. It is gambling, right? Although it's not gambling, it's prediction markets. Maybe Vegas, the casino owners should also change their the names of the places, right? We don't own casinos. We own prediction palaces. That's what we have. No casinos, prediction palaces. Now, someone yesterday on X retweeted a clip of Robinhood CEO talking about, again, prediction market. It can be like your insurance, right? Because you can put money on something, and if it happens, then poof, you'll make money on that. But as you know, we do live in some kind of a crazy society these days. What if you have a prediction that says, I'll pull it up. Because as crazy as it sounds, I don't see how we're not going to get a headline like this. As crazy as it sounds in the future. Hopefully it doesn't, and I'm wrong. I hope I'm wrong, but my hopes aren't, I don't have that much hope. Where did he put this? Here. So will there be a, let's say that's the prediction. Will there be a fire in the LA County in 2026? Someone drops 100K on yes, that pays 25x. Pays off some lowlife to start the fire. Voila, $2.5 million richer. Is it so far-fetched to think that this might happen in the future? Because in many of these cases, this is not even prediction market. This is like it's manipulation market. Some of these things are easily manipulated. Heck, Coinbase CEO manipulated it on the last earnings call. On the earnings call, he started mentioning names of crypto names, things that he had to say during the earnings call in order for people to win their prediction. Right? He basically did that during the earnings call. He said, apparently there is a bet going on, that I will mention, I don't know what he had to say, Solana, Ethereum, stablecoins, or whatever, during the earnings call. And of course, once he mentioned that, well, all of these bets are over and everybody's winning money. So, easily manipulated in this case. Of course, if you are betting again on sports, then it's the same as the sports books, yeah? If someone wants to put a bet against himself, which is illegal, he can still go on, maybe score an own goal on purpose, and of course you win the bet. But those things, of course, are illegal and already exist. But this case right here, easily. I unfortunately can see this happen because it's money, it's gambling. People are willing to do crazy things about it. But yes, I do also think that you can easily manipulate these things. I mean, isn't that insider trading? That's been happening, right? When you have a Congress buying stocks before something happens, it's basically the same. Lastly, what did you want to say?
An incredibly important question. Where are you?
Okay. It's not that important. But I did see some jet skis flying by there. And then a boat chasing the jet ski. Maybe this is like GTA. Someone has like 5 stars and takes the jet ski and he needs to flee. And so right now what we're seeing is we got red across the board. Doesn't matter where we're looking. We got green. I'm so used to say red across the board. We have green across the board. But PayPal is down because of that note. That was screen free. Yeah, correct. 2.4. But we all got the point. PayPal should rebrand, right? The logo shouldn't be blue anymore. It should be a red, a complete rebranding, Bordeaux, to make it posh. Lastly, not lastly, but this is something that I want to cover before. So Core Scientific, right, the company that CoreWeave wanted to acquire. Core Scientific Citizen upgrades to market outperform sets the price target at $30. Apparently the price right now is 13.5, so lower than where it was before, which makes sense. The price target reflects 19 times 2027 EV to EBITDA, citing robust growth outlook. Power Pipeline supports future HPC lease expansion beyond CoreWeave. Right? CoreWeave is a big deal for Core Scientific. Positioned to meet rising HPC demand amid industry power constraint. Now, in here, you can see that this is what I said. We believe Core's Power Pipeline provides a solid foundation to secure additional HPC lease agreement with new customers beyond CoreWeave, and they have here CoreWeave market. I assume this is market outperform, I think, something like that. But anyways, they've got a $180 price target on CoreWeave. As you know, CoreWeave is much lower than 180 at the moment. I'm quite surprised that they did not change the price target just yet. I'm quite surprised. Maybe they will eventually, I don't know. But that was Core Scientific. Yeah, we've got some Coinbase, of course, notes, Meta, $810 price target. Meta is now the cheapest of the Max 7, especially on the forward PE basis, and Meta is a clear winner. Yes, they're going to spend quite a lot on capex, but when you think about this, all of the AI slop, the videos and all of that, they're all posted on Instagram, on YouTube Shorts and whatever. It's just an insane influx of content on Instagram, which means more people will waste their time on Instagram Reels, which means more ads will pop up, which means, of course, more money for Meta. Now, what about all the investments? What's the return on investment? We already know that currently AI is helping making the core business more profitable. But what happens next? What happens with this whole reality labs? What happens with AR, VR, and Meta AI, right? Because Meta AI, let's be honest, it has been a flop for now. But we'll see. As I said before, if you're serious about software, should be making hardware. I'm certain that Zuck is serious about the software and is very serious about the hardware as well. I think hardware tech are going to be it's going to be crazy over the next couple of years. We've got news. Someone asked me about new holdings. So Goldman Sachs reiterates buy, maintains price target of $21. New is back under 16 at the moment, or just at 16 in the pre-market. They see 60+% EPS growth in 2026, attractive valuation and room for net interest margin expansion post Q3 results. Valuation seen attractive as 16.5 times 2026 earnings. So definitely not on the expensive side when they expect it to grow 60%. No, I don't think that next year. I think next year people will wear more smart glasses as Google comes out with their own in partner with, forgot the name, and Samsung. You have already Ray-Ban right now with the Meta glasses. I own them. I think they're great. But it's not AR. It's just smart glasses, right? You can listen to music, phone calls, videos, pictures, and you can, of course, use Meta Meta AI, although should be better. Should be better. According to Jefferies, data center demand ending the year strong. A whole here book on neoclouds, hyperscalers, enterprises, etc., etc. I'll just read the first part here. Leasing demand continues to look robust, with Oracle reporting $248 billion in non-commenced lease this quarter, up 133% quarter over quarter, implying 7.2 gigawatts of incremental data center leasing. Again, it's Oracle, and as we've listened yesterday to which one was it? I forgot. I think it's what Goldman Asset Management or something like that. Talk about the fact that 90% of all of that build out debt, whatever you want to call it, sometimes the same, comes from cash flow generating companies, and only 10% from the likes of Oracle, CoreWeave, and the rest. Now, of course, whether you believe this or not is another story. And so right now we are here. We have greens across the board, other than the ugly duck PayPal. All neoclouds are green at the moment. Could we see a reversal? I rather not speak. I rather not say anything. Nvidia is up 1.8. I'm going to pull up the charts in a bit. Just a major overview, and then let's end the CNBC talk with this right here. So Hightower's links say that you should be careful in the tech sector AI trade. We've talked about the rotation happening, and it's been happening for a couple of weeks, actually. Why do car fatalities go up? Because people are tired, emotional, and are looking at their phones more when they drive.
An anxious market, a turbulent tech trade, and what to do about it. Let's ask our panel. Trivariate's Adam Parker, Hightower Stephanie Link, iCapital's Sonali Basak. Adam and Stephanie are both CNBC contributors. It's great to have everybody with us. Sonali, I'll turn to you first because you're sitting with me right here at Post 9 at the New York Stock Exchange. What's going on in this market?
You know, it's interesting. We've been saying for months, right, that the tech trade would get more selective as things start to get hashed out. It's not always going to be pretty. I think what's interesting about today is signs of any contraction here in credit markets as it pertains to that big tech trade. Now, what I'm hearing here is that really this might be an idiosyncratic issue when it comes to this site, when it comes to the Oracle project, but it just shows you that these are not riskless propositions. There's a lot to consider when it comes to the build out. That means the localities, their feelings about these data centers, as well as the other infrastructure, and also the returns being demanded. Look at what is being demanded just on other Oracle sites, north of 25%. So certainly investors want to be compensated for that risk.
Adam, have we hit some kind of inflection point here in the AI trade? I mean, what is happening that the market is all of a sudden so concerned about certain things and certain stocks?
Yeah, I mean, look, we published over the weekend, I think you saw that you're not seeing the multiples, the enterprise value to forecasted sales expand for some of the original winners. So whether it's NVIDIA, Broadcom, AMD, the multiples have peaked. So for the trade to keep working, I think, and get back on track, you need the fundamentals to come through. And I think you'll see that. I don't think it's over. I think you'll see that in January and April. I think what hurts the people I talk to, the most institutional investors trying to beat the S&P 500, what will hurt them the most is if the grade 8 outperform the market. I mean, every year ahead outlook that I've seen or that investors have told me about is, well, we're kind of bullish on the market, but we think the grade 8 will lag and there'll be diversification. So that, if you want to be contrarian, you say we're getting close to buying these things and they outperform again in 26. I agree with the comments we talked about last week's show. I think Oracle also has some idiosyncratic stuff on top of it. And I think the market's worried about two things that cause every peak, Scott, which is arrogance and debt. And the market's got some of that in the AI space for sure.
Steph, is that how you see it as well? I mean, as goes Oracle, seems so goes the AI trade in general. it's just not going to find any traction, it doesn't appear, if this continues to go, Stephanie, the way that it is now.
Look, Oracle is a real concern, and the CDS spreads are telling you that at up 153 versus February lows at up 33. It's not disaster, but it's concerning, and it's all about the financing and the lack of understanding of what they're going to do. This is all because they're going to have negative 21 billion in free cash flow next year. You want to contrast that to something like Broadcom, which has lost their multiple from 40 times to 32 times in a week because in sympathy with Oracle, but they're growing 40% in earnings. You're almost at a one peg for one of the best custom ASIC companies in the industry. And they are going to have $46 billion in free cash flow next year. And oh, by the way, that's up 71% year over year. So I think you have to be very careful on what you're picking within the AI, especially in the technology side, because all of these stocks have had tremendous runs over the last several years. But where the fundamentals are not getting rewarded, that's where you do your homework, you roll up your sleeves, and you look at some of the numbers. Broadcom's AI growth was 70% in this past quarter. Guidance is 100%. Their backlog up $72 billion for the next 18 months. These are real numbers. But again, it goes back to cash flow. They don't have to go to the debt markets. They can fund this all out and continue to grow and expand. And so there's a lot of companies that are great that you can own that are getting thrown out with the Oracle concerns. And I would add industrials, utilities, and also the power companies, healthcare companies. A lot of companies are going to see benefits from AI.
Well, I can't really argue against that, to be honest. I mean, I don't think we can argue against what she just said. The issue is that the market always focuses on one specific company, whether it's for the good or for the bad. We've seen that with Nvidia, right? And every time Nvidia reports, it's like it's the biggest earnings report of the year. If Nvidia misses, the whole market tanks. If Nvidia crushes it, the whole market goes up. Although the last time that did not happen, despite the numbers being quite good. Then it went to Oracle as well, or Google. The market always goes and say, oh, this is the company that will decide whether or not we go up or we crash. It doesn't make any sense. The market should go up based on all of the companies reporting good numbers, or maybe it should go down because all of the companies start to suck or they're all overvalued. But the fact is that right now we are in a state where, well, 2 minutes until the market opened. We are in a state where the market is like, you know what, we're only going to fixate on this specific company right now. And if it misses, everybody goes down. And if it beats, everything goes up. But it doesn't make any sense, right? The Oracle is true. Oracle, they don't have the cash flow. If we're being honest, Oracle does not have the cash flow. But does that mean that everyone else needs to drop because of it? I don't think so. I think Oracle specifically needs to drop because of it. But then Nvidia doesn't need to drop. Meta doesn't need to drop. Microsoft, Amazon, the other players out there, they don't need to drop because there are different companies, different stages, different profitability profile, different depth profile as well. So this whole focus of, I mean, we're only going to fixate on one specific company, to me, doesn't make any sense. Yes, Broadcom is in a much better position than Oracle at the moment, but yeah, I mean, Oracle has that backlog. If they can realize that backlog faster than expected, then I guess they will start generating a lot of revenue, and hopefully a lot of that revenue does flow to the bottom line. But in the meantime, yes, in the meantime, you can get opportunities in other sectors like we've talked about. You can look at healthcare, you can look at industrials, you can look at various companies that have also seen a little pullback, despite them not being related to this whole AI build out, but these companies will definitely benefit from adopting AI because it would make their business more efficient and more profitable. With that said, ladies and gents, Ding, 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 bing, bing, bong, bing, bong. Market is open. It is December 18. We are Thursday right now. And the markets are open. Now, I know you're probably freaking out and saying, whoa, we are familiar with this color right here, the red. Correct. But for some strange reason that did not update, so let me do the job for the trading view. Much better. We now have the unknown color right here, which is green. We haven't seen really a lot of green in recent weeks. I guess seeing a green day. Wait, let me close the poll because this time I don't want anyone cheating here. Let me close out the poll here, and then we'll see if the green stays green throughout the day, because again, this is something that we've seen before. We've seen this actually yesterday. Yesterday was also we started off greenish for a lot of the names, and then it it ended red. Bright red, actually. So 58% of you say green, 29% say red, 8% say flat, and 5% say Micron. Micron closes red. So if we look at the big tech companies, we have Tesla up 3%. Wait, let me remove this as well. Much better. We have Tesla up 2.7, Oracle 2.5, Meta almost 2, Amazon 2, Amazon finally something. Google 1.8, Microsoft 0.7, and Netflix 0.2, with Apple being flat reddish at the moment. Then the chip stocks. We have Micron that's up 13%, Lam 6.2, Clack 4.8. The equipment makers have been very green lately. Applied Materials 4.7, AMD is up 3.6, so back above $200. Intel 3.7, Marvell 3.4, ASML 3%, TSM 2.8, Qualcomm 2.6, Nvidia only 1.8, so still not a lot of love for Nvidia, sitting at $174, with Broadcom here at 1.7% up on the day. NeoClouds, Hut 8 continues to go up 12% today, Cypher up 9.5, same for Applied Digital, Core Scientific 7.5, Iron 7, Nebus 6, CoreWeave 5.8, and White Fiber 3.6. Whether or not this will hold throughout the day is another story. So now not popping any bottles here anytime soon. And now let's look at Fintech. Okay. Voila. Much better. Whew. For a second there, I thought, whoa, PayPal is green. Something's wrong here. But no, PayPal is back red. So we have Robinhood that's up 7%. Pagaya that's up 5.5%. Yesterday, Pagaya was also up, I think, 3 or 4% or 2 days ago, but it closed out red. Sezzle is up 5.2%. Affirm 4.6%. SoFi is up 4%. Dave 4.6%. Chime 3%. Same for Adyen. Klarna almost the same. New Holdings same. Webull same. Shift4 up 2.3%. Now maybe that the market finally understands that Jarek Arizikman is not at Shift4, although he has not been at Shift4 for months, but he's now in charge of NASA. Maybe Shift4 can continue and maybe rebound from here. Block is up 2%, same for dLocal. Amex is up 1%, Visa 0.5%, MasterCard 0.4%, and PayPal is now down 0.3%, back under $60, believe it or not. So yeah, that little green was like, Neil, check the list. Look, I'm green for a second. Bye-bye. Rug pull, couch pull, whatever you want to call it. Horrible. So let's move on. Other names, we've got Rocket Lab up 8.4%, AST 8%, BMNR is up 5.5%, back above $30. We have Shopify, still holding strong, 4.6%, Palantir is up 3.8%, Rubrik is up almost 3%, Zeta is up 2.2%, Oscar is up 2.2%, Okay, that was red pre-market. Melli is up 1.7. Uber is back at $80 here, up 1.5%. HIMS is up 1.7, so that's at $35. Reddit is holding up quite nicely, actually. 1.83, because it's... Let me actually pull up the charts. Because Reddit was at $200. When was it? Yeah, start of November, under $200. So a big rebound here in Reddit. Duolingo still 184. Adobe is up a little bit. CRM is down 0.1. PayPal is right here. Sucks. United Health is down 1.23%. Google is up 1.6. Yesterday was yesterday was a bad day for everyone. So it seems like Meta and Reddit, they both rebounded quite heavily from the November lows. Now Meta is struggling to go above the 50-day moving average at the moment. All right, let me check the chat real quick. Mbappe, you have a question. You're curious. Rank these stocks from best conviction to least. Aha. This is a challenge for everyone in the chat. You can let us know what you think here as well. Duolingo, Oscar, Uber, Adobe, Netflix. So, of course, I own 3 of those names. I would say Uber is number 1, Oscar 2, then Duolingo, and then Netflix, Adobe. If I had to choose. So, of course, the top 3 is going to be the stocks that I do own, which makes sense. Whoa. What happened here? Slack decided to suddenly pop up out of nowhere. I did not know that Slack had so much power on my PC. What the heck is this? Ah, a message. So voila, that would be my ranking. We have here Uber, Adobe, Oscar, Netflix, Duolingo. Oscar, Adobe, Netflix, Duolingo, and then you put Uber as last. So Stefano, why you like this? Adobe, Netflix, Uber, Oscar, Duo. Adobe, Oscar, Netflix, Uber, Duolingo. Uber, Adobe, Oscar, Duolingo. There is one name that, Simon, you miss Netflix here. Duolingo over Netflix. I mean, I own Duolingo. I don't own Netflix. So if I would put Netflix above Duolingo, then you would probably see a change in my portfolio. Which, who knows, maybe it might happen. But in the meantime, not. Uber, Oscar, Adobe, Duolingo, Netflix. Oscar, risky. Risky. I don't see it as risky. I see it as volatile. Because again, based on management's comments, I think they've got it under control. If they can still reach the $2.25 of EPS for 2027, I mean, $2.25 in 2027, stock is trading at 15.7 times. It's not expensive, right? Of course, execution is key, and we don't know what happens next year with morbidity rates and all of that, so we'll see. Why is Uber so high for you guys? Because it is an incredible company, very profitable, and I do think they will become more and more profitable in the future. I do also think that next year they have less headwinds, or we can call it a tailwind when it comes to insurance costs. That should help them as well. Yeah, correct. I forgot the name. Whoever had their 50% gain on Micron options for what was it? I think March. I think it was March. If you're in the chat, let us know. Let us know if you're here, because today, I mean, if you didn't take your profits, then today you are probably going to be up a decent amount. Although I do think that since then, I can't remember what day it was. So of course your options did take a hit leading to the earnings report. So I guess maybe now you're back to your 50% profits, I assume. But yeah, in the meantime, I am swimming in a sea of red PayPal calls. They should have hired me as CEO of content. I would have done it for free, just so I can pump my own bags. Sezzle is up 5.5%. I mean, I don't own it, but you can clearly see that it did go all the way down to completely close that gap and a little bit more. And since then, it's up a decent amount. It's actually up, yeah, it's up 46% since the bottom. Also, it bottomed out mid-November. What app is this, Jakub? It is TradingView. I'm not affiliated nor sponsored by them, although I do think they should sponsor me, but okay, that's maybe a story for another day. We found, I thought you would be our savior. When you entered PayPal, it started to go up a little bit, and now look where we are. I thought once you opened a position, we would finally go up, but now you are on the same boat with with us. 17% upside. Well, I sure hope it has 170% upside, because 17% upside is not going to help us at all, unfortunately. Could this be a dead cat bounce? I mean, we've seen enough cats bounce over the last couple of days, right? And they're all dead right now. They're all dead. All the cats. Poor cats. I don't understand who came up with these names. VIX has been creeping up a little bit, but not by much over the last couple of days. Wait, I missed a question here. Going to bed. Good night. Good night, sleep tight, and don't let the bed bugs bite. Have I looked at a company called InnoData? Yeah, we looked at it a couple of times on the stream. Looked okay, but not for me. Not for me. Mr. Cornman, if you want to, you can look at every Sunday video. We do a portfolio update. You can see everything there. Currently, I'm at 48% year to date. I was, of course, much higher before. I was at 61% a week ago and 76% at the end of October, start of November. But if you want to have a closer look, there is a link in the description, I think, or just watch these Sunday videos for the overview. It's free, so if you don't want to get the day-to-day stuff, every Sunday there is an overview. We also look at a lot of market data, which, now that I think about it, I do think that Subutrade did post some more data that we can look at right now. Let's see. Okay, so this is one, and then the other is this. Yeah, this one. Is it too late to buy Micron? It's probably not too late, but I wouldn't. I think right now there are better opportunities if you want to start opening up positions. Because yeah, you don't want to chase stocks at all-time highs, even if the business performance has been insane, right? I think there are a lot of great companies that have pulled back in recent weeks, which could present you with better risk rewards, I think. All right, so Subutrade, great follow on X, lots of data. Should you watch the Sunday video on this channel or the other one? Well, the other one, hopefully it won't exist towards the end of the day, because otherwise I'd be very pissed. So for the first time in over a year, AAII bulls exceeded 44% for 3 straight weeks. This tends to happen 6 to 12 months after a market crash. Okay. The S&P was up 6 months later every single time. The average gain is 10%. So this is basically what we get, right? In the short run, probabilities are still in our favor. On average, we're still going to be up. But if you're looking at 2 months, 3 months, 6 months, 1 year later, the probabilities of us being green go up substantially. Now, there are, of course, cases where we are going to see drawdown. So here we have the max drawdown over those periods. So 1 year max loss on average, that's 3.1%, 2.3% 9 months later, 2.3% again 6 months and 3 months later as well. So I would say okay data here, but as you know, I've shown you also some bad data yesterday, which we'll go back to it in a bit. Now, if we look at the S&P, what happened with it after it fell over 1% today, which was yesterday, despite more than 2% of its stocks hitting 52-week highs and no 52-week lows. Here as well, if you look out, we'll start here 2 months, 3 months, 6 months, 9 months to a year later, probabilities are very much in our favor almost every time. 87, 90% of the time we are green. So that's good. Now, if we go back to what I showed you yesterday, and yes, I'll show you again. I won't show you just positive data to fit the narrative, but I've shown you this in yesterday's video. This is what happened with the S&P after margin debt increased by over 42% in the past 7 months. And we know what has happened over the past 7 months. Well, over 7 consecutive months, the S&P went up. So people definitely were very comfortable. Unfortunately, if we only have this data, right? If you only have this data point, then we are effed, right? We are effed. Because 9 months later, only 20% of the time, the market was green. 10 months later, 11 months later, a year later, always red. Always red. Of course, there's not much data to work with here, to look at or to work with here. You have a couple of data points. You have 2, let's say, dates that aren't great, right? 2000 and 2007. So keep this in mind. Keep this in mind. Although if we look at all of the data that we've seen, there are way more, let's say, positive indicators than negative ones. But that's not a reason to ignore the negative ones. It's just to paint a better picture. Now we also have a complete different scenario, right? We have rate cuts. Clearly, inflation seems to be under control for now. The problem is the labor market, but that can be, I would say, helped by more rate cuts. Yes, we still have this tariff story, whether or not the Supreme Court will, basically Control-Alt-Delete this thing. We've got trade deals, we've got huge infrastructure build out, we've got GDP growth that is quite high, but a large part of it is because of AI. So if you really want to dig into this, you have to go and look at all of these dates. 1959 April, what happened 12 months before, 12 months after, specific things that happened in the economy, etc., etc. June 83, what happened there? You have to look at each of those dates and maybe, okay, it happened because something specific during that year happened. And then, yes, we have the yen carry trade thing that might unwind right now. I did have a very nice, if I do say so myself, I'll pull it up, some nice graphics from Nano Banana. Look at Duolingo. I thought you guys wanted me to look at Duolingo because it went up, but no, you guys like red more than green, it seems. Duolingo is down 2% today. Do I think Uber it's a smart choice today? Well, again, if you like the business, I like it, so I bought it. If you don't like it and you don't understand, you don't like to follow it, and maybe you don't, the most important part is you don't understand the risks, then I don't think you should be buying it. But if you do understand all of it, then I do think that in this market, Uber is a pretty attractive name right now. What did I want to show you? I had the graphics from yesterday. Where is it? Not this, but yeah, this. So this is basically it. This is what's happening right now. What do you think about First Solar? I talked about First Solar, I think at the start of this, end of last year, and maybe also at the start of this year. I talked about this one and Enphase. I always said that First Solar is less risky because it's less about high interest rates, low interest rates, residential areas, and all of that. And it was very cheap. I haven't looked at it more recently, so I cannot comment on that. But I did know that the stock went up quite a lot. Now, the Bank of Japan will probably raise interest rates, go from 0.5% to 0.75%. Now, what happened before is that, well, interest rates were at zero and sometimes even negative. So it became a no-brainer to borrow from there. You borrow from there and you buy high growth assets. Now, what happens when suddenly interest rates start to go up? Well, people that aren't liquid will have to sell those high growth assets in order to pay the interest. And this is what's happening and could become worse if suddenly interest rates continue to increase in Japan. The market will probably go down heavily if they are going to raise by another 0.5. So 50 basis points instead of 25. Now, why is Japan doing it? Well, Japan is doing this to control inflation. Now, they have to control inflation, but they also don't want to overdo it because it's not like the economy is doing so well there. So they don't want to go and put interest rates at 4 or 5% or so. Also, if interest rates were at 4 or 5% in Japan, because of the huge amount of debt, they would have probably been bankrupt today. So they are in a tricky situation. Remember, it all started, was it August 5th, the Black Monday of last year. The market crashed. The market in the US crashed. The market in Japan crashed as well. Since then, it's been calm, and then they started to raise a little bit here and there. And so we'll see. We'll see what happens. They are, of course, the largest holder of US bills, so US treasuries. So yeah, we'll see. We'll see what happens. We should get an announcement. Well, it's tomorrow in Japan, so maybe later today, I guess, in the US, or just tomorrow. Just tomorrow. The trade desk seems a great buy at these prices. It's, let's see where it is. It's still 38 or something like that, I assume. 38, maybe 36. No, 37 in the middle. It does seem, I mean, it does seem, it's definitely cheaper today than before. That's for sure. But as I explained before, with the trade desk, you are now in a... I'll come back to the Nebus question in a bit. With the trade desk, you are now, of course, in a situation where, finally you can have this stock for a much lower price, much lower valuation. Previously, I mean, the trading P is 42.2 times, and the forward one is 18.9 times. Now, This was always a stock that was trading at a premium because, well, execution was incredible. They never missed an earnings, although at the start of this year, it was their first miss in 8 years. So, okay, we'll give them that because 3 months later, it was again a very good quarter. The problem with the trade desk right now is that it's not that it's not growing anymore. It is growing, but of course it's growing a little bit slower than before. But the problem is the sentiment around, the narrative around the name, that, okay, you're focused on the open internet, we get it, the total addressable market is huge, etc., etc. But if that's the case, then we should and we would like to see a reacceleration in growth. Now, management told us that, well, told investors, I don't own it, but they said that they do expect to see a reacceleration. One moment. So they do expect a reacceleration in 2026. If it happens, then great. Then I do believe that the sentiment around the stock is going to go up. If it doesn't happen, then this will stay dead money, as they said, right? If it doesn't happen, if management again says, okay, we expect reacceleration, it doesn't happen, it's going to stay down for a while. And yes, it's out of the NASDAQ 100, but again, I know it attracts, but it doesn't change anything for the business. The business itself needs to show signs of reacceleration. If that happens, it doesn't matter if they're in the NASDAQ 1 or in the NASDAQ 1000, it doesn't matter. It needs to show signs of reacceleration. That's it. As for Nebus, someone asked about that gap. So the gap is not, again, the gap did not fill. But yesterday, again, this was the previous top for Nebus, right here, August of 25. Previous top was $75. Seems like it did touch that yesterday. Yesterday's stock was down 6.7%. And today we're seeing a small rebound. To go and fill that gap, it needs to go down another 12-13%. Will it do it? I don't know. But if we go, it's going to be quite close or just at the 200-day moving average. And I will probably, again, load the boat at these prices. We'll see if it actually happens or not. We did get, let me here show you again my beautiful artwork. We did get one of the co-founders, Roman, talk about, again, with the information about Nebus. So he doesn't like to be named a neocloud. He wants to be named an AI specialized cloud. So he specifically talked about, right, the $7 to $9 billion in ARR. That's the exit rate of 2026. He talked about raising money previously through convertible debt. And moving forward, they want to move towards asset-backed financing. That's what he said. Not what I said, that's what he said. Afterwards, talked about pricing power and total cost of ownership focus. So value over lowest price, they are sold out, which means when you are sold out, you can pick and choose which type of customers you want to sign. When that happens, you can, of course, negotiate on the price, and the margins will probably be much better than when you're not sold out. And it's going to be cost per token, not a GPU hour cost. They specifically talk about everything that happens after training, inference, platform management, application management. All of that is the focus for Nebus. They see the future of AI models as a multi-model landscape. You have the state-of-the-art ones, the closed source. You have the open source ones, which are cost-efficient, low latency, used for fine-tuning, and then you have the specialized workflows. I think Nebus is still misunderstood by the market, and thank God it is, because I do believe that this is probably one of the names that will let me buy a very, very comfortable couch earlier than expected. What's the hype beyond the traders? I don't think there is hype beyond the traders. I just think it's just a stock that was much higher and has come down quite a lot, so it attracts a lot of attention. But I don't think there is hype around the trade desk. It's just a very good company. It was a very good company. And remember, this was a company that did a split. So stock would have been, the stock was once super, super high, purely stock price. They did a split to make it less expensive. So it would have been, I think it was 10-1. So it would have been right now at $370 or so. It was previously then at 1,000. Would have been maybe more dramatic. Paigai is up 7.7%. Yeah, I agree. I still think it's very cheap. It's very cheap, and it did exactly the same thing as what it did here in November. Dropped under the 200-day moving average and rebounded. Drops under, rebounds. Will it continue to go up this time? Remains to be seen. Last quarter was again a pretty good quarter. They showed that they are better than the other companies in their sector. So good for them. As for the rest, still all green across the board. So thankfully, it's a good day today so far. Yeah, Nvidia, it's 173. I mean, it doesn't really make that much sense. Doesn't make much sense to me. Peter, you bought some Netflix yesterday, a small position, so I can add if it drops further. Yeah, I mean, can it drop further? Everything can drop further. It is in no man's land at the moment, so it's probably going to try and stabilize here in the low 90s. I mean, I hope I'm right. I'm basing my conclusion based on what I know, what management told me. So I do hope that I am right, because if I am, then we are all going to probably be buying nice couches. What do I think about an option play for Duolingo expiring January 27, $300? Oof. It's quite aggressive. It's quite aggressive because remember, they're now trying to attract more users and not really monetize the whole thing. So it's in a transition. Now the transition can work very well, right? You can suddenly attract a lot more and automatically they start to be monetized. It's a good football joke on Ian Wright. Let me actually check the option. So you said January 27, $300. Well, the premium is still, I mean, it's still quite high, huh, for such a. I don't think it's worth it. I'm looking at the options calculator. So you put here the ticker, it gives you the stock price, you choose your option, price per option $28.20. Let's say you buy one contract, and then it shows you the price range. So the potential upside and the potential downside if you buy it. We are now at $180. From $180 all the way to $300, that's 65% upside. So 65% upside, for it to be making a lot of sense, you would have to reach $300 way before January for it to make sense, right? Because if you reach $300, let's say start of June, it's 152% upside. But if it's September, it's only 77% upside. So it's not worth it. Because if the stock naturally goes to 300 and you only own shares, your upside is 65%. Here, yes, in some cases, your upside can be much higher. But the time here is against you, which means if you're not reaching those prices in time, well, your upside is going to suddenly turn into a downside. And is it worth it? Just holding shares will give you 65% upside. Holding the option, you can be making more money, but how much extra is the risk worth? How much more from the 65% are you willing to take on? In my opinion, it doesn't make sense in this case here. If it was much cheaper, then yes, but right now, if you're asking me, I don't think it's worth the risk. Also a question for everyone watching: what's the most volatile stocks that you own? I mean, I guess it's the neo clouds, right? I guess it's the neo cloud. Although I could even say Oscar, but no, I still think it's the neo clouds. I think that's the most volatile stocks at the moment that we can own. I do wonder what's been happening with the cloud ones, with the quantum ones. Okay, man, this would have been such a good hedge on everything that's happening. Like this, shorting this here was such a no-brainer, but was so expensive. So 60% pullback for Rigetti. What's up with the other ones? QBT also 60%. Okay, so at least they were also down 60%. Okay. Thanks for no sports talk. Well, there wasn't really much to talk about for now. So yeah, we have Data Vault again with this name. Data Vault, CoreWeave, Nebus, Oscar Neo Clouds, ASTS. Yeah, I mean ASTS, Rocket Lab probably also. Zeta, where is Zeta right now? It's here. Up 1.6 at $17.67. Nebus is apologies. Nebus is 9.8% of the portfolio right now. My iron average is now, I think, 25, if I remember correctly. Let me check. I think iron is 25. Let's see. Iron is 24.3. Okay, so let's call it 25. And Nebus is 42. So I'm still doing well with those two names, but my my average with my average with CoreWeave is higher. Is I think now 80, in the high 80s. So this one I'm down, but the other ones I'm good. I'm good on those. I did buy a little bit more of CoreWeave yesterday, so lowered the average a little bit, but not by much. All right. With that said, I think we can leave it here. We do have some stocks pulling back a little bit, but not by much. For now, we still have quite a lot of green. Am I a millionaire? No, not yet, at least. Not yet. Hopefully. Does it matter? It matters just for the lifestyle, I guess, more comfortable. But no, I am not. But hopefully, if everything works out with the investments, then it should eventually happen. Hopefully it will eventually happen for a lot of us, if not all of us. I'm pretty sure that some of you already are. But yeah, that's about it for me for today. For tomorrow, I don't know if I'll be here. Maybe yes, maybe no. If it's a bad day tomorrow, then I guess I'll pop up. And if not, then I might take my Friday off. Well, take Friday off. I actually have some other things to do, but we'll see. So anyways, thank you all for joining. It's been a pleasure to finally have some greens here. And yeah, hopefully it stays like this and we can continue to go even higher and end this year on a higher high, which is always a better way to end the year. So thank you all for joining. Have a great rest of your day. Bye-bye.